Hi, good evening, guys. This is a recording of the webinar we're supposed to happen on the February 26th. And due to technical issues, I wasn't able to do that. And this is the next best thing I can do for you. Now, let's start off with the Dow Jones. Like I said earlier on at the beginning of the webinar itself, this week itself, we have a breakout of the trading in US equity markets. Over the last 2.5 months, we can see that the market has been in consolidation, basically kept below 34,342, and the market broke out. As you can see, let me highlight this area to you. The market has actually broken out of this 33,581. So you can see this breakout was actually quite persistent, and it traded to a low at 32,643.5 on Friday. And on Friday, although the market did rebound somewhat, the market does suggest that this market is doing a three-wave pullback here. And if this continue into the new week itself, there's very possible that the market may actually test the 32,200 level, which is this bracket of prices here. So this is a three-wave, and if it's a three-wave, it does suggest that there will be more upside to come. But if this market accelerate to the downside below 31,600, then it will be a totally different picture altogether. Let's hope the market can actually stabilize at 32,200 and then give us a buy signal, and then to show that the market has stabilized and getting ready to resume to the upside. Okay, so this is what we can see from the chart itself. Now over in the S&P 500, let me increase this. Let me show you. Okay. We also have a three-way pullback from 4,195.4 to 3,943. Okay, so this is a three-way pullback, although the market has actually broken out of a near-term support line, but it does show that this is an area of prices that have actually held out. Market has been fighting at the 4,000 levels, and the market at the close of Friday is still below 4,000 at 3,970. So this suggests that the market may be a little bit weak going forward. But if you look at the lower time frame, let's say we look at the 4 hours, you can see that this market has done a 1.618. Normally, this 1.618 does suggest that further weakness is likely to come, although there's every possibility that the market may rebound back to this area here, which is 4,028.3. So if we see a bit of a rebound in the early part of this week itself, we will have to prepare for the idea that it may actually come back down again to complete a 5-wave pullback. And the next level to watch out will obviously be this level at 3,885. Okay, so this is what may happen in the S&P 500. In the Nasdaq itself, let's go back to the daily time frame. We are beginning to see that the market has actually hit a key level, which is a key support here at 11,900. The market went down to 11,900 and stabilized, and then this is again a three-way pullback. And if the market can stabilize at 11,900, it may actually give us another run up, perhaps in the near term. Let's go back to the 4 hours, and we can see that the nearby resistance is going to be this level here at 12,227. So this is the potential for a market to do a rebound, and if it cannot sustain, it will probably slide back again, and then we will have to see where else it will go. The market actually decay all the way to 11,900. That will 11,500. That will be serious, because that will tell us that the market is getting ready to unfold in a 5-way structure. So a 5-way structure means the market will go down very, very sharply before we do a minor retracement and then go down again. So that is the case. Then obviously over the near term, we can see there is a possibility of market actually going all the way to 11,250. Now, this is based on the lower time frame, but if you look at the weekly time frame, we're beginning to see that this week has been pretty ugly. We have a very, very, very solid sell-off this week itself. So again, the overall trend in the Nasdaq 100 remains bearish, because the overall trend remains negative. So we will have to take it with a pinch of salt here. Now over in the Russell 2000, if you base on the weekly time frame, you can see a series of consolidation that's been ongoing since as early as June last year. Okay, so the bottom here says 1,641, the upper end is 2,030. So the market has not broken out of this range itself. So as far as the Russell 2000 is concerned, it is still in consolidation mode. Although the larger degree time frame, it does suggest the market may be poised to go down. Okay, so we have to see how far this rebound is taking us. It has already done a 3-wave rebound. okay, which is capped at 2007. We will have to see whether going forward in the new week itself, there's going to be any improvement. So far, it is a three-way pullback, and it is still allowable for the market to continue higher. But again, there is no definitive pattern here. Okay, when we look at the UK remains elevated, although the price has come off since the high traded at 8,047 has been the record high so far. And we are seeing a bit of a pullback, but this pullback has been controlled above the support line here. So you can see the support has not been taken out just yet, though it may actually attempt to take out the support line in the coming weeks, okay? But based on this structure, it remains very, very bullish, okay? Over in the DAX, which is the German index, we can see this week has very resolutely traded to the downside. I'm basically already short the DAX for more than 2 weeks now. So the market finally resolved to the downside, and this could be developing into something a little bit more serious, because the bottom can only be found at 14,940. So we still have maybe another 800 more points to go before the market find a bottom here, okay? Over in the Asia itself, you can see Hang Seng remains very vulnerable. Okay, what we have is that we're going to have party congress going to be held in mainland itself, and typically that favors mainland stocks other than Hong Kong stocks. So when you look at this, with a week closing on Wall Street, Monday, tomorrow itself, I think the market will actually trade to the downside. Provided it did not trade below the 19,300 levels, I think the market still have a chance to rebound. But if the market actually take out 19,300, that means to say the rebound from 14,597 is over. The market is getting ready to resume its larger degree downtrend. When we look at the weekly time frame, we can see that this market is pretty ugly. It does suggest that prices, if it really trade below 19,300, it will mean the market is getting ready to trade much lower, and it could over time challenge the low here at 14,597. Over in the Shanghai Composite, you can see Shanghai Composite has a different structure altogether. Let's go back to the daily time frame. Over here, we can see market is consolidating. Obviously, the market has actually started to rebound as early as November itself. So this is a three-wave rebound, which has yet to ideally hit the target. My original target is at 3,375 here. So this target remains to be still in play. Okay, so at a minimum, it should actually attempt 3,347. So you can see the market actually has difficulty trading beyond 3,110. For 3 rounds in a row, the market has not been able to go much higher, and the market decided to ease off before the weekend. Now, based on the 4 hours time frame, the market remains slightly bullish, okay, because this is a consolidation, and it may actually continue to trade higher. The key here will be 3,310 here. If it can take out this level, the next target beyond the 3,347 ideally should trade up to 3,375. Okay, this will complete a 3-wave rally. Over in the Nikkei itself, we can see Friday there's a bit of a rebound of the near-term support line here. So maybe this is where the market may be going higher in the coming days. Okay, so the Nikkei itself is actually trading very differently, because the new governor of the Bank of Japan has just given a speech, and he says that he's going to maintain the easy monetary policy outlook for now. So that means it is a boost to the Japanese equity market. So you can see Friday after the speech, you can see that the Nikkei actually rebounded. So that could actually set the stage for much higher prices. But overall, we can see that the series of highs has been getting lower and lower. We can see 29,200, 28,660, 28,500. So each high has been getting lower and lower. And the most recent low is 27,821. Whether this sudden rush up in Japanese equity prices can actually go beyond 27,821 remains to be seen. But if it can, then maybe structurally something has changed, because so far every low has been lower than the previous low. Okay, so this will give us an idea whether this run up is going to be sustainable or not. Personally, I do not think so, because the overall picture suggests that the Nikkei is pretty weak here and it is in a bear market. So after a long period of consolidation, it may actually have to resolve to the downside eventually. Okay, so again, on the short term, maybe we can see some strength going forward, but again, the 27,821, well, you want to watch those levels. Over in the dollar index, the dollar has obviously been going higher. The whole idea being the Federal Reserve now have no choice after the series of very hot economic numbers coming in, suggesting that the US economy is still running pretty hot, and it means that they have not destroyed demand. It means also that they will have to hike rates again. And the whole issue here is, will they hike 50 basis points or maintain at this month's rate hike quantum of 0.25, which is 25 basis points. So the market is beginning to come around to the idea that Federal Reserve may actually hike 50 basis points, and that is underpinning the dollar. So we can see dollar has gone up, and if you can take out 105.63, it is getting ready to fly. Okay, so overall, we can see that on the daily time frame, the dollar has actually peaked at 114.78, and it has been coming down since October of last year, rather at September of last year, and it seems to be finding a bottom at 182 based on the dollar index. But we can see the dollar is beginning to climb back up again. This is also evident in the dollar versus the yen. The dollar is getting stronger and stronger. The bottom here is 127.22. And of course, we know that the dollar yen actually picks out at 152 in October last year. So we can see that this is also getting in line with the dollar index bullishness. So over the near term, we can see further strength in the dollar. That means all other currency will have to fall back. The strength in the dollar would have impact on the other markets as well, especially commodity markets. We see crude oil prices been unable to rally. We see gold prices unable to rally as well. So a strong dollar is definitely a negative for commodities for now. And but it does look like the strong dollar is going to be here for some time. Okay, over in the euro versus the dollar, we can see that the same thing. If the dollar is strong, the other currency will have to backpedal. And we can see euro dollar here now is at a very critical level. If it cannot hold above 104.80, okay, if it ever close below 104.80 on any daily time frame, that means the market has already peaked at 110. Okay, and this is laying a foundation, okay, going forward, that the market may actually try the 95 cents eventually. Okay, so we all know how the Eurozone economy is behaving, especially in Germany. The numbers we have seen last week has not been very encouraging. So if the currency cannot hold up, okay, that means inflation is going to flare all over in Europe. And because with a weaker currency, you have to import in, especially energy products with a high US dollars. And if that also causes the energy prices to be more expensive, it's definitely a negative for the whole of Europe. And that is going to be reflected in the currency rates here. When we look at Aussie, okay, I have not sold the euro dollar yet, but I'm really short the Aussie market. You can see the Aussie is down at 0.6718, and it's largely due to the idea that gold prices has not been able to rebound. In fact, gold prices has actually gone down again this week, especially on Friday, and that is definitely a dampener for the Aussie dollars, because the Aussie dollars is very, very closely correlated to the price of gold. Okay, so we can see that Aussie dollars actually also pick up at 0.7160 levels, and it's beginning to show some weakness, especially after you take out decisively this what we call a support and resistance. Okay, but so far it is a three-wave pullback. There's every possibility, because it hit its target. This is the equality target, 0.6727. Market went up to 0.6718. So it has hit its equality level. The next question is it able to hold out here? If it cannot, and market takes out this level here, everything is gone. Okay, 0.6585. If the market goes below this level, 6585, then the bear market will take over in the Aussie markets. Okay, they also do watch out for these levels going forward. Okay, earlier on, I did show you that New Zealand has actually hiked rates, okay, to be on par with the Federal Reserve Fed Fund rate at 4.75. That also means that the Kiwi dollar should be strong, but we are not seeing that in the currency markets. In fact, the Kiwi ended the week at the low end at 0.6191 on Friday itself. So it's getting close to the equality level, which is 0.6122, and that's not very far away. So you can see that if this is the case, if it is just a simple three wave, then obviously it's good. But right now we are seeing the strength of the dollar getting pretty obvious. So I suspect that the market may actually go below 60 cents this strong. Okay, so if this is the case, prepare for lower prices in the Kiwi market as well. Okay, over in the sterling, sterling has been holding up relatively well. Because the high of 124.47 seems to be challenged the previous time. Okay, this high here, there was a marginal high, I believe. Okay, 1.2447. It was a marginal high here. Market did not extend higher. Fallback now is unlikely. It's very likely to fall back in a three wave, and the pattern here likely to settle at 1.1783. So this will be the equality level. Ideally, this is the setup, and hopefully it can rebound from here. But again, I am not very optimistic that it can do that, because the strength of the dollar is becoming to be quite prevalent. Okay, look at the dollar versus Canadian. Dollar Canadian has shown a move up. I previously mentioned that if the market goes beyond 1.3620, this is a sign that this is not just a simple three-wave rebound. Okay, it is possibly going to end up as something more substantial. Okay, the key level here is 1.3705. If the market close above this level, I think the market will eventually challenge 1.3977, which again plays into the strong dollar scenario here. So overall, the dollar is likely to resume its upside. Okay. Over in energy prices, you can see energy prices did a bottom of, let me go down to the lower time frame to show you. The market this week itself has been coming under attack. So, okay, so we can see the energy prices has been going much lower, okay, until it hit $43.80. And this is exactly where the 78.6 retracement is. So the market hit this level. You can see 78.6 retracement level, and it actually rebounded. So there was a down move on Friday, but it quickly recovered back and to close at the high of Friday itself. So this is laying the foundation for higher prices in crude oil. The first barrier to higher prices obviously would have to be $77.74. So the market need to close above this, and then the next level will be here, $79.76. So the market has a few barriers to cross before it can actually challenge $80.62, but it's looking good. Even the natural gas. Now, natural gas is where I get very excited, because I have previously attempted to buy, but the market was not able to hold out. The market broke out the December 2020 low at $2.24 and continued to go below $2 before it stabilized at $1.97. Okay, so this rebound here so far it's technical, but it's actually looking very good. Now, when I go back and look at the weekly time frame, this is what I see, and I'm getting excited because I have always wanted to buy natural gas. Because if you look at natural gas prices on the peak of more than $10, the market has gone down 80%. So this market is seriously oversold. It's time for even a technical rebound. So there is a lot of upside potential here. So the whole idea is that once the market take out $2.66, okay, that will lay the foundation for looking for any kind of pullback and then to buy, okay, because this market has fallen very deeply, 80% from the high of $10 all the way to below $2. This is a massive move. So on the lower time frame, what we try to do here is to look for buying signal. We are beginning to see tentatively for 3 days in a row, the market has been going up. So that's a good sign. And it closed at the high of the week itself. So we can see on the 4 hours, let me show you this. 4 hours, if I remove this is the December 22 low. Market, if it can pull back 50% anywhere, $2.28, I think that will be a buy. But I think the market have a bit of a gap up here. So maybe the market will at best do this, okay? $2.41, okay? So if this is the scenario, I think the market is getting ready to go higher. I'm very, very optimistic about this, especially if the market first clear $2.66, come back down again. I think that will be a buy. So do watch out for a potential buying signal in the natural gas markets. Okay. And let's look at the precious metal market. Gold continue to be under pressure, largely due to the strong dollar. Okay, the dollar has been so strong that it's also telling us that if the gold market continue to slide, it means that the rally in the dollar may be sustainable. So now the market is resting at $1,808.50. Is this going to be good enough? May not necessarily be, because if the market continue to go lower, let's look at a higher time frame. There is risk that because the market here seems to be accelerating to the downside, there is every risk the market may actually challenge at $1,725. So this remains the nearest bottom here. So if the market continue to extend lower, which is very possible, because my original idea is to sell gold, but again, the market picks up a lot earlier than I expected. I was actually expecting gold to challenge $2,000 before it turned down, but apparently it came early and I missed selling it. But now the market seems to be going down, and this may extend all the way into the end of April. So end of April, early May, maybe the gold prices may stabilize. That also means if that is the case, we can extrapolate that the dollar strength may continue all the way into end of April or early May before it starts to pull back. So this is going to be a move that is going to be quite sustainable. So do watch out for this move here. Over the silver market, we can see the acceleration on Friday to the downside for the silver market. And this is telling us that the nearest support here is $20.58. Whether this can hold, if it fails to hold, which maybe is unlikely to hold, then we will have to lower down our expectation to go down to something like $18. $18 will be the next level of support. Okay, so do watch out, and I want to buy, because over the longer term, I don't see how the global economy is going to be able to transition to something that's normal. Okay, over in cryptocurrency, we can see that cryptocurrency is pulling back, and we are beginning to see the linking of the correlation. Whereas we have seen higher interest rate is definitely going to be a negative for risky assets such as cryptocurrencies, and we can see prices are coming back. But again, it has been very resilient. Based on this, where the most of the US equity market has broken out of a 2.5-week consolidation phase to the downside, we do not see that in the cryptocurrencies here, especially in Bitcoin. So that gives rise to the idea that there may be a little bit of a delinking of the correlation between equity markets and crypto assets here. So that is actually laying the foundation for perhaps a challenge to the upside, perhaps. Okay, so we can see that the rebound from 15,476 in the Bitcoins here has only picked up 25,252. So there is every reason, if it cannot, if it doesn't sell off together with equity market, then there is every possibility that it may actually charge higher. Okay, so do look out for the 25,252 in Bitcoin. Okay, Ethereum is also showing the same strength here. It has pulled back about 61.8%. Okay, from a high of 1,743 down to $1,560. So now the market has been stabilized around this area. Let's go down to the 4 hours. We have a better view of whether this market can actually sustain. The market pulls back to 61.8% at 1,571. Okay, the low here is 1,559.60 cents. Okay, and it seems to be holding pretty well. So if this is the case, there may be a chance for the market to actually rally. Now do a simple what we call a do a simple chart like this, whereby you put a resistance here. If the market trades beyond this and close beyond this on the 4-hour time frame, you can basically take it to the bank and say the market is getting ready to rally. Okay, over in Cardano has actually fallen a lot deeper. It went out to 88.6%, which is the short of 100% pullback. This is about as aggressive as you can get, and the market actually stabilized at 0.351, started to rebound. Again, draw a simple line here, whereby you can actually use this to actually give you an idea if the market is going to be able to sustain higher. Okay, technically, I think the market is moving, has the potential to move higher. Okay, same thing for Solana. Solana is having a lot of problems lately because the system seems to be unable to lock in for quite some time. People are not able to do any transaction for this particular token here. So it has been affecting prices last week. And maybe it has resolved its issue. Market went up to $21.44 so far, and we are beginning to see that market wanted to rally. Okay, so we will have to see going into the new week whether this is going to be the case. So this is all I have for you for this week itself. So if you have no other issues, I will see you again next Sunday. Hopefully by then I would have resolved all these technical issues that I faced this week. In the meantime, take care, and I shall see you in March. Bye-bye.